Today, we explore a range of significant global events shaping our world, from economic shifts to geopolitical tensions. Notably, we'll analyze the implications of the Federal Reserve's latest inflation data and the merger of major airlines. Here are today's top 10 stories you need to know. Korean Air has officially completed its merger with Asiana Airlines, marking a significant milestone in the aviation industry. This merger process began during the COVID-19 pandemic, when the airline sector faced unprecedented challenges. With this final step, Korean Air aims to strengthen its position in a competitive market, enhancing operational efficiencies and expanding service networks. The integration is expected to lead to greater financial stability and improved customer offerings. As the largest airline in South Korea, this merger will allow Korean Air to consolidate resources and streamline operations. The formal merger contract, which came into effect today, is anticipated to be finalized by the end of the year. Analysts suggest that this move will not only benefit Korean Air, but also stabilize the overall aviation market in the region. As the airline prepares for a post-pandemic recovery, this merger could redefine air travel in Asia. Looking ahead, we will closely monitor how this integration impacts the airline's operational strategies and market share. Cerebras Systems has made headlines today with its initial public offering on Nasdaq, raising up to $4.8 billion. This marks a significant debut in the AI chip market, highlighting the growing demand for advanced computing technologies. The company is known for its innovative wafer-scale engine technology, which has positioned it at the forefront of the AI revolution. With this IPO, Cerebras aims to expand its research and development efforts, further enhancing its product offerings and market reach. Investors are keenly interested in how this public listing will influence the competitive landscape of AI hardware. As the tech industry evolves, companies like Cerebras are crucial in driving advancements in machine learning and data processing capabilities. The successful launch of this IPO is expected to attract more investment in the tech sector. Looking forward, we will track how Cerebras leverages this funding to innovate and lead in the AI chip market. U.S. Treasury yields fell today as investors reacted to the latest inflation data, which exceeded expectations. The yield on the 10-year Treasury note decreased as market participants digested the implications of a significant rise in consumer prices. April's inflation rate reached its highest level in nearly 3 years, prompting speculation on future Federal Reserve interest rate policies. With inflation climbing, the market is now contemplating potential rate hikes rather than cuts. This shift in sentiment is critical as it influences borrowing costs and investment strategies. The fall in yields indicates a flight to safety among investors amid economic uncertainty. As the Federal Reserve evaluates its approach to managing inflation, the bond market's reactions will be pivotal. Following this trend, we will continue to monitor how inflation impacts interest rates and overall economic stability in the U.S. Gold prices have experienced a notable decline today, primarily driven by stronger than expected inflation data released from the U.S. This unexpected shift has significantly diminished hopes for imminent interest rate cuts by the Federal Reserve, which traditionally bolster gold's appeal as a safe haven asset during economic uncertainty. As inflation continues to rise, investors are reassessing their strategies, leading to a widespread sell-off in gold markets. Currently, gold is trading lower, reflecting not only these immediate economic concerns, but also the potential for higher interest rates in the near future. The latest inflation report revealed a substantial increase in consumer prices, marking the largest annual gain in 3 years. This situation has triggered increased volatility across precious metal markets. As investors navigate these turbulent changes, the outlook for gold remains uncertain. Analysts suggest that upcoming central bank policies will be crucial in determining the future price movements of gold and other commodities, particularly as inflation persists. The release of strong inflation data in the U.S. has sent ripples through financial markets. Consumer prices rose at an annual rate of 3.8%, marking the fastest increase since May 2023. This unexpected surge in inflation has raised alarms among economists and investors alike, as it suggests a potential shift in the economic recovery narrative. The market had anticipated a lower inflation figure of around 3.5%, and the discrepancy has led to significant reactions across various asset classes, particularly in equities and bonds. Investors are recalibrating their expectations as the possibility of Federal Reserve interest rate hikes looms larger. This inflation data could influence economic policy and consumer spending patterns, potentially slowing down growth if borrowing costs rise. As the Federal Reserve deliberates its next moves, the focus will be on how these inflation trends shape the economic landscape. Analysts predict that if inflation continues to exceed expectations, we could see a more aggressive stance from the Fed in upcoming meetings. Vinci has announced impressive first-quarter earnings results, showcasing its robust financial health. The company reported a record fee-related earnings of $96 million, reflecting strong demand for its alternative investment solutions in Latin America. This performance underscores Vinci strategic positioning within a rapidly evolving and competitive market landscape, where investors are increasingly seeking diverse opportunities. The firm has declared a quarterly dividend, signaling confidence in its ongoing profitability and commitment to shareholder returns. This positive earnings report is expected to strengthen investor sentiment and could lead to increased capital inflows into the firm. Analysts suggest that Vinci focus on high-quality investment services allows it to differentiate itself from competitors, enhancing its appeal to both institutional and retail investors. As the company navigates its growth trajectory, it will be essential to monitor how these earnings impact its market strategies and future performance. Looking ahead, Vinci aims to leverage its strong financial results to expand its service offerings and further penetrate emerging markets in Latin America. Stock market futures have risen today, signaling a positive outlook despite recent volatility in the financial markets. Nasdaq futures are up significantly, driven by optimism surrounding major tech stocks such as Apple and Nvidia, which have been pivotal in the sector's recovery. The S&P 500 has also shown resilience, closing above 7,400 for the first time, marking a notable milestone in its performance. This upward trend reflects growing investor confidence in the technology sector, particularly amid a backdrop of rising inflation concerns that have plagued the economy. Analysts have pointed out that while inflation remains a critical worry, the market's low volatility mindset is sustaining buoyant investor sentiment. Futures contracts linked to the Nasdaq 100 indicate that market participants are betting on continued growth in the tech industry, suggesting a potential shift in capital flows. As we move forward, it will be crucial to monitor how macroeconomic factors, including inflation and Federal Reserve policies, influence these positive market trends. Investors are keenly awaiting upcoming earnings reports to gauge future performance. Asian markets have demonstrated remarkable resilience in response to challenging global economic conditions, with many major indices showing significant gains today. This positive movement comes amid ongoing concerns over inflation and geopolitical tensions, particularly in Europe and the Middle East. Investors across the region are expressing a renewed sense of optimism, fueled by robust corporate earnings reports and signs of recovery in critical sectors such as technology and manufacturing. Markets such as Japan's Nikkei and Hong Kong's Hang Seng are reflecting this upward trend, suggesting a broader recovery phase. This resilience underscores the potential for sustained growth within the Asian economic landscape, especially as countries emerge from pandemic-related disruptions. The ability of Asian markets to thrive amid uncertainty also highlights their strong fundamentals, including solid fiscal policies and increasing consumer confidence. As we look ahead, analysts suggest that continued monitoring of inflation rates and global supply chain dynamics will be crucial. The ongoing adjustments in monetary policy by central banks worldwide will significantly influence these markets, making it imperative for investors to stay informed about developments in Asia's economic landscape. Tensions in the Middle East have escalated significantly, raising international concerns over stability in the region. Recent military movements, particularly near key border areas, and escalating diplomatic disputes between regional powers have heightened fears of potential conflicts. This spike in tensions has not occurred in isolation. It follows years of simmering disputes over territory, resources, and political influence. The ongoing situation has drawn attention from global leaders, with many advocating for immediate de-escalation and constructive dialogue. Analysts warn that continued instability could severely impact global oil prices and economic relations, as the Middle East is a critical hub for energy supply. Furthermore, the geopolitical landscape in the region is often volatile, with past conflicts illustrating how quickly tensions can spiral out of control. These developments could have far-reaching implications for international trade and security, affecting nations far beyond the Middle East. As nations navigate these complex challenges, the importance of diplomatic solutions becomes paramount. Looking ahead, the upcoming meetings of international stakeholders may provide an opportunity for dialogue, and there is hope that these discussions could pave the way for a more stable and peaceful future in the region. The Federal Reserve is confronting a significant challenge as new inflation data emerges, indicating a notable increase in consumer prices. Recent reports reveal that inflation has climbed to its highest rate in nearly 3 years, a situation that is raising alarms among policymakers and economists alike. This surge in inflation is largely attributed to supply chain disruptions, rising energy costs, and increased consumer demand as the economy recovers from the pandemic. The implications of this data for monetary policy are profound, as it intensifies discussions about potential interest rate hikes. Investors and economists are now recalibrating their expectations, contemplating whether the Fed will maintain its current stance or shift towards tightening monetary policy. Such changes could significantly influence borrowing costs, consumer spending, and overall economic growth, which are critical components of a healthy economy. The Fed's response to these inflationary pressures will be crucial in shaping the economic landscape in the coming months. Analysts are closely monitoring the Fed's upcoming meetings for any signals regarding future policy adjustments. As inflation continues to challenge economic stability, understanding the Fed's strategies in addressing these pressures will be vital. Looking ahead, the central bank's decisions will likely determine the trajectory of economic recovery and financial market dynamics in the next fiscal year. Thank you for joining us today. Which story resonated with you the most? Let us know in the comments, and don't forget to like and subscribe for more updates.